What's up, YouTube? Back at it with another video, y'all. Hey, this video is going to be a little bit different than what I normally post on my channel. So what this video is essentially is my free credit learning program. So I'm big on spreading information and to teach people how to create a living off of credit. There's just some things that I just feel that everybody should know about credit, right? So like, I'm not big when it comes to gatekeeping information, and a lot of y'all ask me the same questions over and over again. And instead of me, for one, having to respond to all of the same questions over and over again, because obviously I'm busy, you know, and there's so many people reaching out to me that I can't reach out to everybody in a timely manner. And then two, they don't teach about this information, and I understand that. And I kind of want to be that person to be able to teach you guys the basics of credit, because everybody needs to know this information. And honestly, this is information that you shouldn't have to pay for. So I created a free program within my community, and of course, you know, you guys can join my free community, and there's a lot more information on there in regards to, you know, getting information and basic information about credit. But I still wanted to create this YouTube video just for you guys to have, where you guys can binge the majority of it. It's not all the information, because of course I got like ebooks in there, PDF guides, and there's a couple more videos that's actually on the free community, which I will put in the description below. For the people that have been following my channel and the people that have, you know, just stumbled upon my channel, you guys can still get the majority of the information and kind of just like essentially binge watch it. But just things like what are trade lines, and that's the biggest thing, and that's what actually sparked me into creating this free community and this YouTube video, is the fact that everybody hits me up talking about, hey, I need a trade line and the trade line's gonna make my credit perfect. That's not the case. And again, this video is a collection of different videos I recorded explaining everything, but it goes over trade lines, how to remove hard inquiries, goes over how to actually turn credit into wealth the proper way, and then just things like what is credit, different types of loans, different types of credit cards, things of that nature, just so you guys can actually understand what credit is and how you can use it and leverage it to create wealth. That's essentially what this video is. It's going to be about an hour-long video with just a bunch of game. Again, it's just a collection of game. It's going to be kind of all over the place just because like it's different pre-recorded videos already. That's why I got this introduction right here. But yeah, y'all, just bear with me on it. But like I said, it's a lot of game in here, so I just want y'all to actually take in this information and just be ready to learn. Like, you know, you can have this playing in the background just to kind of like, you know, have it in your ear, or this is what I prefer, you actually sitting down taking notes, because again, this is information that everybody should know about credit. Like, this is the ABCs of credit. This is how to count with credit type deal. Like, this is what everybody needs to know. Again, y'all, this is strictly free game on here, so please make sure y'all like, comment, and subscribe. And then comment if you want me to add some more free game in here. Like if I missed something or there's something else you have a question about, either comment or go in the description and join the free community. And I do respond within the free community as well. So you'll be able to go in there and, of course, ask me that question personally and I'll respond, all right? But that being said, let's get into the video and, hey, free game.
When it comes to reading your credit report and understanding what your credit report is and why it's so valuable, first you need to understand what is credit so you can see the value in reading your credit report. So the definition of credit is your ability to pay back borrowed money. That being said, that's what your credit report is. Your credit report is the proof and the history of you showing your ability to pay back borrowed money. Think of your credit report is similar to like a report card. It's your history on your grades on paying back borrowed money. So your credit score is essentially that grade in the class, and your report showing, hey, you passed this test, you have 100% on homework, you have no missing assignments. That's your credit report. And that's why your credit report is so important, especially compared to your credit score, is because that's actually the history you have with different banks, different lenders, different credit unions on your ability to pay back borrowed money. You probably hear me say on social media all the time that your credit score means nothing. I exaggerate that. Your credit score does have value, but your credit score in comparison to your credit report has no value. And that's what I mean when I say your credit score doesn't matter. Because you can have an amazing credit score, but your credit score is a numerical value of your credit report. And that numerical value is calculated by the average between good and bad on your credit report. So you can have one good item on your credit report and zero bad. It can have a crazy high credit score. But when lenders actually pull your credit report, you can still get denied due to lack of history, not enough active revolving accounts on your credit report, or just not even having a relationship with that bank and them not even trusting you just because you don't have a checking account or just have a simple relationship with them prior to you applying for that form of credit. So when I say that your credit score means nothing, I say it in an exaggeration in comparison to your credit report. So just keep that in mind when you hear me say throughout this video and any other videos that when I say your credit score is irrelevant, it's not completely irrelevant, because again, it is a numerical value of your credit report, which can show good and have a correlation with your credit report. But I had to learn the hard way that your credit score doesn't really mean as much as your credit report. And I learned that through applying for a AC unit to buy for my mom, because my mother, she was in a bankruptcy when I was in high school. So when I graduated and turned 18, I had a 788 credit score, and I got denied for every single loan that I applied for due to me having only secondary history. And once I got the denial letter telling me why I got denied, yes, I had a 788 credit score, but I had lack of history. So that's why it's so important to understand how to read your credit report, what a credit report is, because yes, you can have a high credit score, and I was taught growing up that all you need is a high credit score. But in reality, banks and lenders don't care about that. Banks and lenders want to see the actual active history that you have with credit to verify and have proof that you can pay back that borrowed money. One more example before I go into teaching you guys what a credit report is and how to properly read it. Think of it like this. I ask you to borrow $10,000. You say, okay, Jeremy, I will lend you this $10,000, but I need proof that you're going to pay me back. I tell you that my credit score is a 788. I give you three lousy numbers. Are you going to be able to trust me with $10,000 just of me telling you that I have a high 3-number score? No. What you're going to do is you're going to ask me for proof of income, and you're going to ask me my history with paying back other people. It's the same thing with these banks, because you have to think as these banks as investors. They're people, they're businesses. The same way you wouldn't trust me with that money just by me giving you 3 lousy numbers, these banks are the exact same way. With that being said, let's dive into what a credit report is, how to read it, and even where to read it at. So right now I'm showing you this Credit Karma account, and a lot of people hate on Credit Karma, a lot of people hate on Experian. Let me say this, when it comes to reading your credit report is going to be identical everywhere you check. Only thing that's going to change is your credit score. And the reason why your credit score is going to be different every single app you go to, every single website, every single bank, it doesn't matter. It's going to be different everywhere, because every single system is going to grade up everything differently. So you guys probably see like on the Experian app, or probably seen in like textbooks or online, where it says your payment history is 35% of your credit score, utilization is 30%. It's a little bit more in depth than that. It's not just a percentage and they add up all the percentage and divide it out for a score. No. They calculate everything and take it into account in different ways in different systems, different apps, websites. For example, Chase might say, hey, my Experian credit score is a 720, while if I go to my Navy Federal app, they might say it's a 715, but my credit report is exactly the same. Why is that? It's because they take different things into account, like age, number of inquiries, your most recent open account. So that's going to be different everywhere you go, and that's why I say these apps really don't matter, because your credit report is going to say the same. It's going to have the same amount of inquiries, the same amount of accounts, the same age. It's all the same information. So when it comes to getting a credit report, honestly, in my opinion, it doesn't matter. I use Experian for my Experian credit report, and I use Credit Karma for my TransUnion and Equifax. And you have to understand, you do have 3 credit scores, 3 credit reports. So a lot of people come to me and they say, hey, Jeremy, I have a 730 credit score. And I ask them which credit bureau, and they say, oh, I don't know. It just says on the Chase app. You have to make sure you know which credit report you're looking at, because different banks pull different bureaus. Again, you have to understand that that credit score is really irrelevant compared to your credit report, because like I said, each bank is going to have a different score that they pull, because they're going to take different things into account, and some things weigh more than others to different banks. So it's important to know your credit report and what's on there, so you can know and be confident, hey, if they pull this credit report, I know for a fact that I'm getting approved because I hit all these checkpoints. What are those checkpoints that banks look for? So right now, again, I'm showing you guys on Credit Karma. These are the checkpoints. Number 1 is payment history. Payment history is just that. Do you make on-time payments? This cannot be below 100%. If you want to get any type of business funding, high limit personal funding, get cars with 0% down, you cannot have a 99.9% payment history. That payment history needs to be at 100% always. Because again, that payment history is your ability to pay back borrowed money. You probably heard me say on my content, if you never borrow any money, how do you expect lenders to trust you? That's one thing. You want to exercise your ability to pay back borrowed money by using it. But another thing is you want to exercise it correctly, meaning you pay it back on time. Because if you don't pay it back on time, banks are going to look at you and they're not going to trust you. And what happens when banks don't trust you? They're not going to give you any funding. They're not going to give you any credit. And if they do, it's not in good terms, meaning it's going to be high interest rates. If you want some type of asset like a mortgage or you want a auto loan, they're going to require a lot of money down to get started with it. It's not going to be in your favor. You're not going to be able to walk into the bank and walk out with a smile on your face. You're going to walk in the bank and walk out and almost getting kind of like screwed over because that payment history isn't up to par just simply because you missed a payment. So how do you always have 100% payment history? You do that by having everything set on auto pay. I set every single one of my accounts on auto pay, whether that be a credit card, whether it be a mortgage, an auto loan, it doesn't matter. Every single one of my accounts are on auto pay. And even if my account goes into overdraft, I'd rather pay a $40 overdraft fee so I can pay my credit card accounts on time rather than me miss a payment, destroy my credit, and now I have to pay somebody for credit repair. Now instead of me spending $40 for overdraft, now I have to worry about paying a credit repair specialist $100, $200, $300, whatever their fee is to remove that late payment off my credit report. The first part of your credit and the most important is that payment history. You want to have that at 100% always. Next up is your credit card usage. So your credit card usage is your utilization. How much of your revolving credit are you using? Revolving credit is different from installment credit. So installment credit is like your auto loans, your mortgages, personal loans, where you take out a loan and you make a payment and that payment is the same every single month. You have a car. You do a auto loan and you pay $400 a month. Every single month on this day, you pay $400 a month. That's an installment loan. A revolving account is a traditional credit card where you have $1,000, you spend on it, and then once you pay off what you spent, you get to use it again. That credit is what is going into your utilization. That's what they count as your utilization, is your revolving debt. Now, you probably heard of the 1/3 rule, meaning for your revolving credit, so for your credit cards, you don't want to use more than 30% of your total available credit because that will hinder your credit score. It's going to lower your credit score and hinder your ability to get more funding. That is very true, but in reality, it's 10%. I speak to bank reps, I speak to bank managers, I speak to banks all day, every day, basically. And the requirements for getting the maximum amount of funding is keeping your utilization below 10%. You want to have it in single digits, between 1 to 9%. 10% is fine, so you can do 1 to 10%. But anything above that, I don't know if you guys have noticed on your own credit report, your score will drop crazy. Even if you use 15%, 20%, it's not 30, but it will still drop your score down. And the reason why is because, for one, it affects your debt to income ratio. Your debt to income ratio is essentially your income compared to your debt to see if you can afford the current debt and to see if you can afford new debt coming on. And it just shows responsibility to the banks to say, hey, they have this credit available to them. Are they actively using it and spending it, maxing your credit cards off? Or do they have the discipline to withhold from spending that money? And can they afford more credit? You want to be sure that you only use credit and use the amount of credit that you can afford to pay back on a timely manner. And you want to be sure to not overextend yourself with your credit and spend so much where you're not able to pay it back. So with your utilization, it's very sensitive and it's very flexible. And what I mean by that is, realistically, you can spend more on your credit cards and raise your utilization up higher, as long as, for one, you know you can pay it off, and two, you're not applying for anything. So a prime example, this credit report, the utilization is at 60% right now. So this would be very, very, very troublesome if this person is not able to pay this money back. If this was on clothes, shoes, chain, video games, unnecessary things that isn't generating an income, yes, that will harm them because they have to pay that down before getting approved for any new form of credit. But let's say if they use this for a business investment and they're able to pay this off whenever they want. It really doesn't matter until they're going to apply for new credit. So if they have enough credit or if they're not ready to apply for anything, utilization doesn't matter. Utilization only matters when you're applying for new credit, because that's when utilization matters. When your credit matters is when you need more credit. Just keep that in mind, and your utilization reports on your statement date. But when it comes to your credit, understand you have 2 dates. You have your due date, which is the contract you signed, hey, I pay this amount on this date. And then 2, you have your statement date. And your statement date is when the bank reports to the credit bureaus, hey, this is the current up-to-date credit card account, whether it's active, it's closed, or they report the utilization and they show, hey, this person paid off this amount on the card or they spent this much on the card. So again, keep that in mind. That statement date is when they report the utilization, not the due date. Kind of to recap on these first two points, utilization, you want to have below 10%. That's an ideal perfect credit score, below 10%, and payment history, always 100%. Next is derogatory marks. Now, derogatory marks are just any bad mark on your credit. That's collections, charge-offs, things of that nature. So anything bad on your credit, that's going to be a derogatory mark. You want 0. If you have any derogatory marks on your credit report, that is going to kill you. Again, collections, charge-offs, repos, bankruptcies, judgments, liens, all that stuff will be a derogatory mark, and it will kill your ability to receive new funding. So you want that at 0. So if you have any derogatory marks, you need credit repair. If you have anything below 100% payment history, you need credit repair to remove those late payments. Credit card usage, their only way to battle credit card usage is to refinance that underneath a personal loan. If your credit card usage is so high, like 60%, meaning your score is really low, then you can do private lending to reconsolidate that debt, or what you can consider is getting a high limit trade line. A trade line is an authorized user, or think of it as you just being added to someone else's credit card, and that credit history, the credit age, and that limit shows up on your credit report. So it lowers utilization because it increases your total available credit. Payment history is credit repair, derogatory marks is credit repair, and credit card usage, that's just either getting a trade line, reconsolidating your debt, or paying down the debt. Then we have credit age. So credit age, bare minimum, you want 2 years. So depending on what type of funding you are seeking, it might need more, could do a little bit of less if you're just getting credit cards, but your credit age, you want 2 years. A good solid credit report has minimum 2 years. And keep in mind, that's not 2 years from 18. That's 2 years average of your credit accounts. So for example, right, let's say you are 25 and you get your first credit account at 25. You have 0 years and 0 months credit age. A lot of people get confused and say, hey, I turned 18, if I'm 25, I turned 18 7 years ago. Shouldn't I have 7 years age? You have no history with credit. You haven't had credit for 7 years. You were just able to get credit for 7 years. Keep that in mind. It's when you get your first credit account, and student loans count. So you got student loans, auto loans, credit cards, secure cards. That's when your credit age starts. And keep in mind that credit age is an average of everything. What I mean by that is, let's say you had one credit card from 18 all the way to 28. That's 10 years. Your credit age will be 10 years, which is perfect. Beautiful, right? Let's say when you turn 28, and you had that one account, you apply for a new credit card. So now you have one credit card with 10 years and another one with 0 years. Now your credit age is going to be cut in half because that 0 years and that 10 years is going to average out to 5 years, killing your credit. So as you guys already know, I have about, I want to say 30 plus credit cards. I have a bunch of credit cards, I have auto loans, I have personal loans, I have a bunch of credit available. And one perk of having all this credit available is the fact that my average age is a brick wall. Meaning when I apply for a new form of credit and that credit age of 0 hits my credit report, it doesn't kill my credit because I have so many credit cards at 2 years, 3 years, 4 years. I have all these credit accounts with so much age on it, it's not going to affect me versus somebody with only 1 or 2 credit cards and they get a new account years down the road, destroys their average age. So 100% payment history, perfect. Utilization really doesn't matter until you're applying for new credit. So when you apply for new credit, you want it below 10%. Credit age, you want at 2 years, and derogatory marks, you gotta have 0. Always have 0 derogatory marks. And keep in mind, if you have 100% payment history, you shouldn't have any derogatory marks. Of course, you have like instances where like a third party, not even anything credit related, like a storage unit, right? Let's say a storage unit, you owe them money, they can put a collection on your credit report. You know, businesses can put collections on your credit report. So that will be like the only instance where you can get a derogatory mark that's not credit related, but any other credit related or any other derogatory mark will be credit related. Therefore, it would be solved just by putting everything on auto pay. If you have everything on auto pay, you will not get any derogatory marks. Then total accounts. This is where a lot of people try to argue with me or try to like fight me on having so many accounts is a bad thing. Banks actually like for you to have multiple active accounts because it shows not only that you're responsible with multiple accounts, but if you have different types of accounts, it shows diversity in your credit portfolio. I want to show banks that you're able to pay back any type of credit, right? So if you only have credit cards, your credit report wouldn't be as strong as if you had 4 credit cards, an auto loan, a personal loan. You're able to show these banks that you're able to pay off different forms of credit because different forms of credit are used for different things. So if I have a paid off auto loan, I can be trusted going to a different bank saying, hey, I already paid off an auto loan. So you can trust me with a new one because I have proof that I can pay off an auto loan. So when it comes to having a total amount of accounts, banks like to see at minimum anywhere between 4 to 8 accounts. Anything more is good. Anything less than 4, you're still kind of a newbie with credit. You don't have that much experience with credit. So having 21 accounts, you can see here, that's excellent. And they're mainly credit cards. Having that many accounts is a good thing. Make sure you're not afraid of getting credit cards because it can only help you. Only time having so many credit accounts can hurt you is if you're not responsible with it. If you're not disciplined and you don't feel like you can handle all that, then don't do it by any means. I'm not forcing you to get a whole bunch of credit accounts. I'm just letting you know that it can benefit you if you have the discipline not to overextend yourself. And lastly, we have hard inquiries. You want to have 4 or below. Some instances 6 can be fine, but realistically you want 4 or lower hard inquiries, and even 4 can be iffy depending on the time frame. So what is a hard inquiry? Hard inquiry is just a credit check. When lenders pull your credit report and take a look at your credit report, that will leave a hard inquiry, and that's what a hard inquiry is, just a lender looking at your credit report. Having so many accounts, right? Of course that's going to create a lot of hard inquiries. So here's a little trick for you guys. When it comes to credit stacking, let's say it's 21 accounts, right? Why does this person only have 4 inquiries if he has 21 accounts? There's a couple reasons. Number 1, hard inquiries only stay on your credit report for 2 years. All other derogatory marks stay on your credit report for 7 years. That's another reason why you shouldn't get any derogatory marks. They stay on your credit forever, it seems like. But hard inquiries are the only bad mark on your credit that stays on there for only 2 years. So in 2 years, they fall off and they just cease to exist. And another reason why this person has 21 accounts and only 4 inquiries is because of this credit stacking technique. We have only 3 credit reports, 3 credit scores, 3 credit bureaus. That's Experian, TransUnion, and Equifax. We are currently looking at TransUnion. There is no credit report or credit bureau more valuable than the next. Most banks pull Experian and TransUnion more than Equifax, but they all 3 carry weight in the credit industry. That being said, different banks pull different credit bureaus, and you can leverage that and use that to your advantage. Because we have 3 credit bureaus and this person has 21 accounts, what they could have done was, hey, when I apply for this form of credit, I'm gonna make sure that they only pull 1 credit bureau. Most banks only pull 1 credit bureau. Some banks pull 2, and it's very rare for a bank to pull all 3 credit bureaus. This person could have had each and every single one of those credit accounts pull only 1 credit bureau, and that divides the hard inquiries by 3. So instead of having 21 hard inquiries for 1 bureau, divide that by 3, that's only 7 hard inquiries per credit bureau. And then from there, it could have been, because their age is 3 years, 3 months. So that means a bunch of inquiries could have fell off. So that's why at first they probably had 7, but then 2 years have passed because their credit age average is 3 years and 3 months. So then 3 of them fell off, and more could be falling off soon anyway. So that's a little trick for you guys to kind of learn how to credit stack. And that's what technique that I use to get so many credit cards. I would get 3 credit cards at a time because I will make sure a credit card will pull only Experian, only TransUnion, and only Equifax. And then, yes, they all show up to my credit report and they will show up on every single credit report, but the inquiry will not be on every single credit report. It will be specifically catered to who they pull. And that's the only thing on your credit report that will be different on every single credit report is the inquiry, because they're going to pull different credit reports. Kind of going back to the beginning of this, why is this information so important? The reason why this information is so important allows you to make the smartest financial decisions, not based on just 3 numbers. A lot of people get hung up on, oh, my credit score is this, so I can think, or I think that I can get whatever I want. I was in the same boat. I thought the same thing. I was taught the same thing. Hey, I got a high credit score, I can get whatever I want. That's not the case. You have a good credit report, you can get whatever you want. And that's why it's so important to understand how to read a credit report and understand this, because this isn't taught everywhere. This isn't just knowledge that's just thrown around. And that's the whole point of me making this video. The whole point of me making my content is to show you guys, hey, this stuff is important. Stuff is rare, but it's so powerful, because now I'm able to walk into the bank knowing my credit report, not my score, that, hey, I can get approved for pretty much anything. So let's go a tiny bit deeper. I want to give you guys a little bit more knowledge before closing this video on just credit reports and all that good stuff. So let's go into closed accounts. One thing that a lot of people don't know is that closed accounts will hurt your credit score, not your report. Prime example, I have a business partner. He paid off his car loan, right? His credit score dropped 10 points. And he was confused. He was like, why did my score drop 10 points for me paying off this loan? That's because you don't have an active loan anymore. That active loan is now closed. So that active history is now not active anymore. So yes, that will lower your credit score, because now you have 1 less open account. Instead of having 21 open accounts, that person now has 20 active open accounts. And that lowers your score because you have less history showing and reporting that's active. But does that hurt your report? No, it does not. And the reason why it doesn't hurt your report is because you now have a paid off auto loan. And banks take that to account. Keep in mind, the reason why we get hard inquiries is because they're pulling your credit report, not your score. So they see that you paid off an auto loan. So now, yes, his score dropped 10 points temporarily. Literally 3 months down the line, his score shot back up. Your score is going to fluctuate over time. Your score will literally drop 3 points for no reason. And that's perfectly fine. What matters is your report. Don't get hung up on your score, get hung up on your report. Because that person who paid off that auto loan picked up a new Benz literally a month later with no issue. And the reason why is because when they pulled his credit report, yes, his score was a little low, but they saw that he had a paid off auto loan. So they saw that, hey, this person is trustworthy because they paid off his auto loan early. So just keep that in mind. Your score is going to fluctuate. It's going to go up 2 points. It's going to go down 4 points. It's going to go up 5 points. It's going to go down 10 points. That's okay. Again, set everything up on auto pay and make sure that you take care of your credit like your life depends on it, because that is your financial future. Especially with everything that's going on in our economy, things are getting more expensive and jobs are getting harder to find. And not only that, your income is not growing that much unless you start your own business, unless you have multiple streams of income. Wages are not going up in comparison to the prices of inflation and everything around us. So to get capital is a lot harder now, and that's where credit comes into play. So you want to make sure that you understand this so you can properly build your credit, so you can leverage it to start your dream business, so you can be able to leverage it to make that dream investment, to make some passive income, because you don't have to wait a year, 6 months, 4 months. You don't even got to wait a couple months to save up the bread to start that investment. You can just simply leverage your credit and walk into the bank and walk out with the money or the capital to start that business venture. So just keep that in mind. This stuff is very important. And again, I appreciate you guys for trusting me with this information. And just make sure that you guys follow me on all my socials. All my platforms is at Mr. Credit to Wealth. And if you have any questions, please don't feel bad to DM me. I answer my DMs. DM me on TikTok, Instagram. So if you just DM me on Mr. Credit to Wealth on my IG, I'll be more than happy to answer any questions you guys may have. So that pretty much sums it up on how to read your credit report. Make sure you tune into my content. And if you are interested in any of my services, whether that be credit repair, funding, or even my mentorship, again, please DM me and I have no issue to answer any questions you may have.
Lesson 1, what is credit? Before I get started with our first lesson, again, I'd like to thank you guys for trusting me with bestowing this information to you guys. And just want to let you know, Again, this information changed my life, and that's my whole reasoning for creating this course. So again, I thank you guys for, like I said, trusting me with this information and allowing me to kind of be your teacher slash mentor through this credit journey. So with that being said, let's get right into it. What is credit? I'm gonna let y'all know I messed up. My bad. I got one more thing to tell you before we get started. Each video isn't going to be crazy long. It may be a couple videos that may be like 10, 15 minutes long, but a lot of these videos are going to be real short because, again, these written portions is the dictionary definition. What I'm going to say in a video is basically my interpretation of it in a more easily digestible way. So I'm not going to sit here and ramble. I might run off a little bit. That's why I said it might be a couple videos that are real long, but a lot of these videos are going to be a couple minutes of me just simply breaking it down in the simplest of terms. So this is basically an overview. So now we're going to get into the lesson. What is credit? This is an overview, what we're going to be talking about throughout part 1 of this course. But what credit is simply borrowed money or borrowed funds. It's between two people, a lender and a borrower. The lender is the person, which can either be a bank, a credit union, or even like Xfinity, NIPSCO. I'm gonna get into that in this chapter actually about service credit, but just basically somebody or some business loaning you some money in return of interest. So you borrow some money, you pay the money back, and their fee is interest. But a lot of companies do fees. So again, I'm gonna get into that later. This is just a quick overview. But what credit is simply just borrow money. So you don't have 100K to buy a house, right? You borrow 100K from Chase to buy the house. That's what credit is. It's just borrow money. And it's, like I said, it's a relationship between two parties, the lender and the borrower. The lender is the person giving the money, and the borrower is the person who needs the money that took it from the lender. Going into it, we have different types of credit. The two most common forms of credit is revolving credit, which is a credit card. And then we have installment credit, which is like loans. So like an auto loan, a mortgage, those are installment credits. So again, we have importance of credit. It's important because it allows us to get assets that we wouldn't have the funds to get otherwise. So vehicle to get to work. We can borrow money to get a car so we can get to work or just be able to move freely. A lot of people don't have, anywhere between 20 to 60K cash to buy a new car or even a used car. So we have credit to do so. Same thing with the house. A lot of people don't have enough money, anywhere between $100,000 to $350,000 to buy shelter for them and their family. So we're able to borrow that money to be able to provide shelter. That's the importance of credit. And you do that by building credit history. Your credit history is really important because your credit history is essentially, are you able to pay back borrowed money? Then we have your credit reporting and scores. We have credit reporting agencies. We have 3 major credit reporting agencies: Experian, TransUnion, and Equifax. And those are basically agencies that collect information to let banks and other entities that are lending out money, let them know, hey, this person is able to pay back borrowed money, or hey, they missed a late payment on their car, whatever the case may be. They collect all your information of your ability of paying back borrowed money, so on credit, and let others know that, hey, they have perfect credit, they always make on-time payments, or hey, they have a couple late payments on their mortgage or their auto loan. And they also say, hey, they also have all this credit out right now. Then that kind of calculates into your credit score, which is a 3-digit number that basically determines your ability to pay back borrowed money. Because that's all what credit is, your ability to pay back borrowed money. And then we have responsible credit management. Just make sure you manage all your debt. You don't take on more debt than what you can handle. And then 2, make timely payments. That's all credit is. A little tip for you guys: set all your credit accounts to minimum payment due. If you do that, you will never have a derogatory mark on your credit. My auto loans, my mortgages, my business loans, my what else I got? Credit cards, especially the credit cards. I set everything on auto pay. So even if I forget about something, I forget to pay off a credit card, it automatically takes it out of my account. I'd rather go into overdraft and pay that $30, $40 fee for going underneath my present spending balance. I'd rather go into overdraft on my checking account than ruin my credit. And I advise you guys to have the same mentality because you can do a lot more with your credit than you can with the $40 you got to pay for that fee because you went into a negative balance. So just make sure you set everything to minimum payment due and always set it, because they're going to ask you for when. Set it 3 days before the due date because sometimes the system messes up and it may not process the funds on the due date. It might be the next day. And some companies, they will consider that still a late payment, and you don't want that reported to your credit report. So just make sure you do it a couple days prior. I personally do 3 days prior from the due date. But if you guys want to take the risk, you can. I understand everybody's financial situation is different. You may have to do it on the due date. But like I said, part of the tip is doing it a couple days before so you don't risk it. Let's say it's on your due date's on a Saturday and the transaction doesn't finish pending until Monday. That's Saturday, Sunday, almost 3 days. So 2 full days you missed that payment for. So just keep that in mind. And then, like I said, this is just a quick overview, but that's pretty much it. What is credit? So again, thank you for trusting me on this course, and let's keep it progressing. Let's keep it moving. We're finna master credit together, y'all. What are the different types of loans? So we went over the different types of credit, but now diving even deeper into it, now we have different types of loans that you can get. This should be a quick and easy video. A lot of this is kind of like self-explanatory, but I still want to go over this just to make sure that you guys kind of get it down packed. So a mortgage, my bad, y'all. I'm trying to get used to this screen share, so just making sure it's lined up for y'all. But back to it, a mortgage is a loan that you use to buy a house. Simple as that. You can only buy properties, whether it's commercial or residential, with a mortgage. Well, you can also use other. So let me dive a little bit deeper into it. So you can use other loans to buy a house. So like you can have like commercial lines of credit, a business line of credit. I mean, you can even put it on a charge card if you have no present spending limit. But the most beneficial loan towards a more property is a mortgage, just simply because you can stretch that mortgage out. A mortgage is going to be 30 years. So your monthly payments are lower because of that. Because of it being such a long term, you pay less because it's stretched out, because you pay less longer. So if you get a different type of loan to pay that property off, you're going to be paying more because the term is shorter, if that makes sense. So because the loan is 30 years, you can break it up into a lot more smaller payments, versus if you use a different type of loan that isn't as long as a mortgage, then you're going to be paying more because you're paying more of the principal and a little bit more interest. No, you're going to be paying less interest because it's going to be shorter. But anyway, well, depending on your interest rate, but that's another topic. But anyway, you're paying more for a shorter amount of time that you have to pay it. So typically, mortgages is what you use to buy a house. Then you have personal loans. Personal loans are very versatile. You can basically use it for a lot of different things. You can use it to buy like inventory for your business, or just at home stuff. You can use it to catch up on bills. You can use it to consolidate debt. You have a whole bunch of credit cards. You can get a personal loan to put all those credit cards underneath one loan, so you're not making like 10 different payments and then accruing interest on 10 different credit cards. You can put that underneath that. But it's really no limit, honestly, what you can do with a personal loan. It just depends on the bank you're going with and what they agree for you using the personal loan for. But I mean, like, I got personal loans and like they ask, but a lot of times they deposit it right into your account now. A lot of things are digital, so you apply for like $30,000, personal loan, and they just deposit it to your account in cash. So then you just do whatever you want. Sometimes they may want proof that you use the funds for whatever you said. But I mean, I've done personal loans and they didn't ask me. They just said, "Oh, what do you want it for?" And I said personal expenses, and they sent me the bread in my account. So personal loans is just really a loan that you can get. That's loans that a lot of people get just for random stuff. Then we have auto loans. Auto loans are specifically used to get a car. Of course, you can get a car in other ways, paying in cash. I mean, you can put it on a credit card, whatever the case may be. But auto loan specifically is used only to get vehicles. Same thing with a mortgage. A mortgage is only used to get a property. So it's no other thing you can do. And that's what makes personal loans so powerful, is because we have the opportunity to do whatever we want with that money. We get the money, we can do a lot of different things. Versus an auto loan, you can only get a car. A mortgage, you can only get a house with it. Then we have student loans. Again, similar to the auto loan and a mortgage, student loans are for loans. I mean, student loans is a loan used to help you through school, to pay for books, housing, whatever the case may be. Just has to be for school. So that's a student loan. Small business loans is it's a lot of different types of small business loans. So, you got business lines of credit, SBA loans, you have equipment financing, merchant cash advances. There's a lot of different versions of small business loans, but we're going to get into that later when we're going to the leveraging business credit course, part 2 of this course. I'm gonna get into that a lot more, but just an overview of just small business loans in general. It's just a loan that you can take on behalf of your business to basically work for your business. I'm not work for your business, but you can use it for your business. So you could quote unquote use it personally. I wouldn't recommend it. If you have to, yeah. But again, we're gonna get into that in part 2 of this course. But yeah, small business loan is quote unquote specifically for business, any type of business expense or financing that you may need. And I say quote unquote because we're gonna get into that a lot later. You could use it on personal, but it's just a business loan. Or I'm gonna say this: a business loan is a loan on behalf of your business. I'm gonna keep it at that, and we're gonna keep it rolling. Then we have credit cards, revolving credit. That's technically, I would consider that a loan. I mean, we can talk about it. We have the chat. Please let me know in the chat what y'all think. But I believe a credit card or revolving credit is a loan. It's just a pocket loan that you can use whenever you want. Because really, a loan is just, a lump sum of money that you can use, or a lump sum of credit. I'm going to just put it like that. A loan is basically a lump sum of credit for something. So for an auto loan, you're getting a lump sum of credit or cash to buy a car. Credit card is basically the same thing. So it allows you to make purchases like a line of credit, because a line of credit is essentially a credit card. The only difference is a line of credit is just cash. A credit card is just credit. But I mean, you can still pretty much do the same thing outside of just things you can't use credit for, like person to person transactions. But a lot of people have like a website or just a payment processor to process payments. So a lot of people can just do peer to peer like transactions with credit nowadays. But besides the point, I'm rambling off. Credit card, I consider it a type of loan. And that's pretty much it. It's just a credit card, a revolving credit, where you get a certain limit and you can just continuously borrow from it, pay it off, borrow from it, pay it off. And then we have, lastly, payday loans. Payday loans are horrible. Don't do them. No, that's only like you have to. Like your life depends on it. Your family is depending on it. Don't do a payday loan, please, y'all. Payday loan is horrible. It's basically like a what's the term? Payday loan is like a shark. It's like shark sum. I can't think of it. But regardless, a payday loan is a short-term, very high interest rate loan. It's not from like banks. It's usually from like third-party lenders, like people you don't know, like Chase, Discover, Capital One, American Express. They're not doing payday loans. It's homie down the street who opened up his own quote-unquote bank, or just someone who got money that's gonna loan you something, but he want a lot of money in return. So you got high fees, high interest rates. Horrible. Horrible. Ooh, excuse me. Sorry about that, y'all. But no, like payday loans are horrible. So please don't do a payday loan. It's gonna really screw you over. I'm not gonna lie, because you honestly may be paying more for the loan than what you're actually borrowing. And it's like people do that to take advantage of other people. So please just keep that in mind. Payday loans are horrible, and the reason why they're called payday loans is what my grandmother told me. It's basically people live in check to check. So people use payday loans to basically help them to their next check, use the check to pay off the loan, and then eventually get another one. It's like an endless cycle. So that's why they call it like payday loans, because I need this loan until payday. So, oh, I need to live off this loan until I get paid, pay off the loan. Then when I use my check to pay off the loan, I have to take another one out to last me to my next payday. It's an ever going cycle. So you see this in a lot of like low income communities. Higher income communities don't have them because they don't thrive. Because I mean, why would someone with high income literally look at this contract and say, "Oh, I got to pay you all this interest"? No, I got my own money, or I go to Chase because I got good credit, whatever the case may be. But low income, low credit score, communities, that's where they kind of stay and kind of prey on. But those are the different types of loans that you can get. So remember, we have different types of credit, and now we're going deeper into different types of loans. I know it's a lot, but that's the whole point of this program, is for me to kind of help break things down a little bit better, because it gets broken down a lot and it gets real tedious. So just continue to rock with me, and I'm gonna continue to put y'all on game.
Jeremy Lander is an entrepreneur, very young, 20 years old, serial entrepreneur, all things finance, all things credit. I met him at a conference. As you can see, he's always dressed to impress, and he's really inspiring to me. So I wanted to bring him to the YouTube channel and to the platform so he can tell us a little bit about how he got here. So Jeremy, welcome to the party, man.
Thank you for having me. I really appreciate it.
Hey, that's what's up, man. Can you tell me, who is Jeremy Lander?
Man, I'm a young entrepreneur and investor straight out of Maryville High School. Did not go to school for anything I learned. And I try to present myself as an inspiration to not only my peers, but anyone I come across, because I feel like a lot of the information that I have is not presented out to the public. So I want to kind of be like that role model to kind of not gatekeep information and let everybody know how I got to this point so more people can follow in my footsteps.
Man, that's inspiring. You know, you're 20 years old, you're an entrepreneur, a serial entrepreneur already. Can you just talk to me about how did you walk into this entrepreneurship journey?
So my grandfather, he taught me the trades ever since I was able to walk and talk. So ever since I was 3, 4, 5 years old, I've been swinging a hammer, hitting down nails, stuff like that. And my freshman year of high school, I worked a 9 to 5. It was a coffee shop in the mall. Quit like 2 months later. I was getting paid minimum wage. I didn't like it. Spoke to my mom and she said I have all these skills, and she actually introduced me to entrepreneurship. So I started my first business when I was about 14, cutting grass, doing things like that. That business failed because I didn't save money. I didn't understand how to run a business. And due to financial struggles, my parents weren't able to help me essentially. So when the expenses became more than I was bringing in, I had to close that business. So then I spoke to my best friend's dad. I remember this day like it was yesterday. We were finna go to the beach, go talk to some girls, and he stopped us. He was like, you guys can go to the beach, or I can basically teach you how to be a man. And he runs a business. So he kind of put us on game on like how to get credit, funding for your business, how to actually run a business. And he taught us how to start our credit before the age of 18. And that's the day where it pretty much changed my life. That's, I want to say, a month prior to me starting my construction business that I still run today. And he taught me basically the stepping stones and how to start and run a business effectively. And I took that information, I just ran with it.
Wow, it's really full circle, right? That somebody volunteered some information to you to help you get where you are. And now you're volunteering information to other people to help them go to the next level.
Exactly.
Right, so, you know, that's really inspiring. And then you talk a little bit about your parents, right?
Yeah.
And just their support, right? And their encouragement. Talk to me about, why is it important to have either family members, parents, or somebody else that will be there to support you during this journey at a young age?
So just entrepreneurship, that journey?
Yes, sir.
Because there's a lot of ups and downs. You know, my first year of business outside of high school, I actually made the same amount as my mother, and she's a teacher. And I wouldn't be able to do that without her, because it wasn't just 1 month I made all this money, or it was consistent amount of money throughout the month. There was months where I was in the negatives and I wanted to quit. But with her support, she helped me. She put a roof over my head. She still fed me. She didn't look at me any different just because I was failing. And when I used to get in my head a lot saying, oh, this business is gonna fail. I haven't made money in 2 months. What's gonna happen? She stood there and said, no, things are gonna, turn around. You just have to be patient and consistent. So with that support, I wouldn't be in this position, because, being an entrepreneur, being an investor, it's not a consistent paycheck. I don't get paid every week, every 2 weeks. It could be 3 weeks, 4 weeks. It could be a day, or it could be a couple months. So without that support and that love from my mother, my grandparents, little brother, my family, and my best friends, I wouldn't be nowhere near this position, because I'd probably be in my own head, in my own feelings, and I would have quit.
Yeah, yeah. Now, you went into finance, right? And you talk a lot about credit, but I know you started off, I saw some things where you were doing construction. How did you go from doing construction, doing grass, all these things, to going into the area of finance specifically?
So I was always interested in just how money flowed in our economy, because at a young age, I realized in order to make money, you have to know how money moves. So I always kind of, like my grandfather, he taught me a little bit about the stock market, how to save money, high interest savings accounts, things like that. And I was always interested in it. So throughout my journey being an entrepreneur with my construction business, I met a lot of people that were interested in giving me knowledge. So for example, my tax accountant, financial advisor, and a few business partners that I have currently that we work on investments together. So with them feeding me all this knowledge on how to get funding for my construction business so I can grow,
I kind of learned how to scale up my business with that knowledge. And from there, I spoke to other entrepreneurs and they kind of were struggling with their finances. So when I kind of told them the solution to their problem, they were just like, oh man, wow, how do you have this knowledge? That's when I realized how rare this knowledge was. And then from there, that's how I knew like, oh, that's how I can give back. So I always wanted to give back. But now I know I can give back by giving this knowledge that a lot of people fed into me by feeding it to others.
I'm still trying to get to how, at 20 years old, you're here, presenting like this, in business like this. What would you say would be the main reason you believe that you can be sitting here the way you are today?
So for one is my upbringing. So I only had my mother in my life. My father, I was actually a trap baby. He was a horrible man, beat my mother, so my mom left him. So having a single mother, two kids, not much money in the house. So that kind of pushed me to be that man for my household and to help provide for my family. So that kind of gave me the strength and the motivation, the discipline to be able to go through those hardships, to be able to help provide for my family. That mixed with credit, that's what helped took me to that next level a lot quicker than most because I didn't have to wait to save money. I didn't have to get a 9 to 5 and save up for 6 months to be able to invest in myself. I was able to go to the bank and finance my dreams and turn that into goals and turn those goals into a reality. So I feel like that's what kind of like basically put me on the fast track to get my success and where I'm at today.
Now, what recommendations would you give to peers your age? Maybe they're in a household where they don't have that discipline, right? And maybe they don't have the knowledge to understand credit. What would you say to that aspiring entrepreneur that's 20 years old right now?
Study. Outside of high school, I told myself I'm gonna have one gap year between high school and me thinking about going to college. And all I did was study. Pick up a book. And if you don't know something as an entrepreneur, hire someone who can do it for you. I'm not good with technology, so I hire people to build my website, put out all my information, things of that nature. So as an entrepreneur, you have to be comfortable investing not only in yourself, but investing in others. And you invest in yourself by picking up a book, studying, going on YouTube. There's knowledge everywhere. You can pick up your smartphone and learn whatever you want in just an hour. And if you aren't that person to learn something, like I'm not a creative person, so I hire creative people to kind of bring that to the table so I don't have to stress about putting in extra effort and time wasted to learn something when I can just invest in someone else and help them grow their self, their business, whatever they may be, while also helping my pockets and helping me grow my business.
That's excellent. Now, you used to run track based on my research.
Yes.
Can you talk to me a little bit about your track journey, and did anything you learned during your time in track help you as an entrepreneur?
Most definitely. My coach, Michael Hoffman, he was like a father figure to me. He helped me channel my emotions and use them the proper way. With all the things I had going on at home, I was kind of like, not bipolar, but it was hard for me to get a grasp of my emotions. But he taught me how to focus my emotion on one singular thing and use it as kind of like an outlet. And that's what I did with track and cross country. I was top in the state for that, broke records in my school for middle and long distance. And it was thanks to my coach. And I kind of transferred that discipline from running into my work life. And that kind of helped me like with, long days of being an entrepreneur. I don't work 4 6 hour days. I work at minimum 10 to 12 hour days, some days 14. That same discipline I had in track, I go out and run 10 miles. That same discipline is still in me where I can say, okay, I'm gonna go out and work 14 hours and it won't affect me. I fast for mental, spiritual, and physical discipline. I did that for track. Now I still do that at work to kind of keep my head on straight, make sure, I'm good spiritually, mentally, physically. That same discipline I got from track and from my coach that I still instill into myself in this day.
That's excellent work. That's excellent work. Um, I just want to know about the confidence, right? Most people have imposter syndrome that they struggle with. Have you ever had imposter syndrome that you struggled with, and how did you develop this confidence that you have?
Yeah, most definitely. And I'm still going through it right now. And it's not in the sense of like, why me? Like, why is it bad? It's kind of the opposite. I don't mean to brag. I try my hardest to stay humble. But, there's a lot of good things going on in my life. And sometimes I sit down and I say, why am I deserving of this? So that's kind of like my imposter syndrome. It's just why me out of everybody else? Because I do see people who are struggling and I help them, but it's only so much I can do as a person. So that imposter syndrome does get to me, but I just have to remember that, for one, have trust in God. Two, there's a reason why all these good things are happening to me is because God trusts me that I'm gonna be able to help others and bring others the same path that He's leading me down. So it's just me continuing to be a leader and stay strong even in the hard times, just so I can help others that are going through hard times, just so they can see better days.
That's excellent. And as we get ready to really conclude, we concluding faster than I thought, but
Yeah.
man, you're giving some excellent just insight, right?
I appreciate it. Ask
So
me something about credit. That's what people came here to see.
yeah, let's talk about credit. So you are expert when it comes to credit. What's some of the myths people have about credit that you would like to debunk today?
Ooh, I love that question. This is my favorite one. How many credit cards you should have? How many credit cards do you think I have?
3.
No. Go up.
Let's go 8.
More.
12.
More. I have 29 credit cards.
Wow.
And a lot of people think having so many credit cards is bad. And people ask me all the time, how do you use all those credit cards? I don't. I use probably 5 on a rotation to save me, points. I get points for gas, travel, all that. But the other ones are in my filing cabinet. And the reason why I have so many credit cards is, for one, my utilization. The 1/3 rule. You can't use over 30% of your total limit on credit cards, or else it's going to hurt your credit, because the banks only give money to people who don't need it. So if you're using a whole bunch of credit, they're not going to trust you with new credit because you already owe so many other people money. So what's higher, or what's better for you, using 30% of $1,000 or using 30% of $100,000? With me having all these credit cards, I have high limits on them. I can use a whole bunch of credit without it hitting 30% because I got so many credit cards. And another thing is your age. So with me having so many credit cards, my average age is like a brick wall, because when I get a new credit card that has 0 years, it won't really drop down my average age because I have so many other credit cards with 2 years on them. Versus if I have one credit card with 10 years, I get a new credit card with 0, it's going to average out in half to 5 years, which is going to lower my credit score dramatically.
Wow. Okay, that's excellent. So when it comes to a aspiring entrepreneur or a current entrepreneur getting their first credit card, how do they go about that process?
Business or personal?
That's a great question. Let's say they don't have a personal credit card and they want to get them a business credit card for their business. How would they go about that?
You can't. Nowadays, everyone looks for a personal guarantor. And that's another myth. A lot of people think, oh yeah, I want to get a car with no personal guarantee. No, there's really no loan you can get without a personal guarantor now. So without any personal credit, it's very difficult to get business credit. If you have an auto loan, you have a mortgage, other forms of credit outside of credit cards, you have a higher chance of getting it if you didn't. But like for someone that's 18, 19 years old with no auto loan, one credit card, it's very, very difficult to get business credit, because they're going to look at your personal side and say, hey, your business is new, you need funding. So if your business can't pay us debt, then you have to pay it. So if you don't have any history to show that you can pay off the debt, they're not going to approve you for anything. So my advice for any new or current entrepreneurs looking to get funding for their business is to, for one, get a 700 credit score. And you do this by using credit. People are afraid to use their credit. Exercise your credit the same way you go to the gym and work out. The same way you read the Bible to, up your faith, whatever you do. Same thing. Exercise and use your credit. Don't be afraid of it. As long as you pay back borrowed funds, which is the definition of credit, you're going to build your credit, and then that's going to lead you to the door of business credit.
Excellent, excellent. So let's say someone has a credit score, they work on it, they get it to 700, they got their credit on the personal side. Now they're ready to jump into business credit. How do they go from 0 to 29 business credit cards? How do they go about that process?
Apply. People are afraid to apply. Do not be afraid. Once you get about a 700 credit score, you have about, I'd say, at least 3 or 4 credit cards that you use on a daily. I only use my credit cards. I only use my debit card to pay off my credit cards. So once you kind of instill that discipline of using credit, paying it off, using it, getting that history, just apply for a business side. The same way you do on the personal side. Just apply for the business end. And when they ask for your gross revenue, bump it up a little bit. That's a little secret. It says gross revenue. As an entrepreneur, you don't know how much you're going to make. There's no salary. So when they ask you, oh, how much is your business seated to make? If you're seated to make 20, say 40. If you're seated to make 40, say 80. Raise it up a little bit, because you don't know how much you're going to make. But just apply for the business credit cards. And if you want to get into like big loans for your, company, you have to be at least 2 years incorporated or have an LLC in good standing for 2 years before you can get a business line of credit of $50,000, high limit credit cards, things like that. But if you're just starting out and you're under 2 years, just apply every 30 days for a new business credit card. Go through Amex, Chase, Wells Fargo, First Financial, KeyBank. Just go to a bank every single month and get approved, and keep doing that every 30 days or so.
Excellent, excellent. So let's say, okay, we got business credit cards, right? But let's say we want to explore other options of funding. What does it look like to do grants or get a business loan? Talk to us about what are some of the other options and what your preferences are for a new business owner.
So I don't know much about grants, but I do have a grant writer working for my company. And I just know grants that it's money you don't have to pay back for anyone that doesn't know, as long as you use them like how you said you were. So with a grant, you have to kind of have like an application. You let them know how you're going to allocate the funds to your business. So for you to not pay the money back, you have to get the money and use it exactly how you told them they're going to use it. That's as much as I know about grants personally. Going to business funding. My favorite type of business funding is a business line of credit. A lot of people don't know about it. A business line of credit is one of the only loans or forms of credit you can get that's just liquid cash. So for example, an auto loan, you can only buy a car with it. A mortgage, you can only get a property with it. Business line of credit, you can wire however much that amount into your bank account or pull it out in cash. So if I need $20,000 for equipment, an investment, paying contractors, whatever I want, I can buy a car with a business line of credit. I just go to the bank and say, hey, I need to make a withdrawal of $50,000 from this business line of credit, and you pay it back like a credit, but you have cash. And another plus is whatever term it is, most business lines of credit is like 5 or 6 years. You can make interest-only payments until the end of the business line of credit term, which is 5 years. Then it goes into a term loan where you pay it back similar to like an installment, like an auto loan or a mortgage, until you pay it off. But the first 5 years, you can only pay interest, which saves you a lot of money. So if your interest rate is at 10% and you take out $50,000, you can pay $500 a month to keep the credit in good standing. But for $500 a month, I have $50,000 liquid that I can invest in whatever I want.
Okay, that's excellent. Man, you dropping some gems, man. We not gonna give him everything, man, because he dropping real knowledge. Tell us what type of services and things do you offer in your business? Tell us more about your business so people can know what you do.
Yeah, so my financial literacy program is Better Finance Today. You can find me on my website at betterfinancetoday.net. And we help with financial literacy. So we have courses on personal credit, soon to drop some business credit courses. We have digital products like ebooks, 2 of them that I wrote, PDF guides on how to start a business, how to get a shelf corporation, things of that nature. And we also do services like credit repair, grant writing, and business funding, where we help teach entrepreneurs how to get the funding, help them if they need credit repair, if they need to know how to invest it, what to do exactly. We help coach them to not only get the funding, but how to use it properly as well.
Excellent, excellent, excellent. And last question before we wrap up. What does digital storytelling look like for you? So how do you show up in the digital space on social media and tell your story to help build your business and your brand?
So right now, everything I do is pretty much word of mouth. I'm not very tech savvy. I kind of put out a little bit of videos out there. I want to say the ending of last year, 2023, in about November range. But now I plan in the summer to start, of course, telling my story, similar to this podcast, but of course more in detail. But, there's a certain kind of persona that I learned that you have to be on social media with. So I'm making some investments to be a little bit more flashy because I'm kind of conservative. I don't like to spend money like that, but I am making some investments so I can get people's attention right away. So when they, see me on TikTok, see me on Instagram, they can have something eye-catching and then hear me tell my story. And I'm gonna try my best to stay professional as possible. When I see people on social media, a lot of times they either give them a portion of the pie, they don't tell you like full circle on how to do things. They tell you something illegal that either they don't know about or they just want a quick, double tap on the screen. So they tell you that way. Or it's not humble, they're braggy. I still want to present myself as the young businessman that I am. I'm still going to pull up in suits. I might be in a, $80,000 car, but regardless, I'm going to be in a suit that's almost as valuable as that car to show people, there's other ways to make money other than scamming, rapping, fast money, whatever they think of. You can be a businessman and still be just as successful as, the rappers you see with the whole bunch of chains, the 100K watch. There's still other ways to make money.
Excellent, excellent. Well, Jeremy, it's been a pleasure This has been a great time. We're gonna have to definitely do this again.
Most definitely.
And let people know where they can find you on social media or on your website.
You can find me on my socials, all platforms at Better Finance Today. My Facebook is Jeremy Lander, JeremieLander, and my website is betterfinancetoday.net.
That's a wrap, folks. Thank you so much, brother. I appreciate you, man.
No problem. Thanks for having me.
Yes, sir.